let me into my zone. Please don't let me into my zone. 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 Please don't let me.
Well, welcome back to Krown's Kiddo Cave. A very dark and gloomy morning this morning over here from Helsinki, Finland. My God, man, it is literally pitch black out right now, and it is right around 9 a.m. So that's giving you an idea of what's going on right here, and almost an allegory for Bitcoin right now as well. So I do want to follow up on yesterday's analysis, yesterday's trades. Yes, I did close some of my shorts at that 8350-ish tick and 8400-ish tick that we saw yesterday, and it's now time to get a little bit more deep and dirty into this. Today we're going to be talking about something that I have not referenced, I don't think ever once, and this is a pretty damn big deal. In fact, the last time that we saw a similar signal to this, it produced a 50% move in Bitcoin and has a pretty damn good history of producing similar type moves. So we'll be talking about that to begin with. And before we get into it, what else do I want to say? Yes. Okay. So I've made a mistake on speaking about the Krown trading application, which is coming out for what I've been saying, a public beta on Monday. It is a public beta, but a public beta for all of the people in any one of the programs already. That means if you're in the technical analysis program or in the options program or the Jewel program, you'll 100% have access to it on Monday, this coming Monday, just what is it, like 2 days away. So also remember that this is still just a beta. So it's, we're still kind of working out the bugs and fixing everything up. But we're also going to, as a thank you, give you access to just about, or not just about, but every feature of the app for free for the first, month or so, whatever it ends up being. We haven't really decided on that just yet, but I for me, a big thing is to always give back, and to me, that is, that I think that that's just the right thing to do here. Anyways, what else do we want to say? Yes, if you are in the Jewel, by the way, if you are in the Jewel, please do message me on Discord, as the Jewel exclusive community is now up. So I'd love to add your access there. Please do be aware that I have to do this, manually. So sometimes it can take a little bit of time. I do sometimes, leave my computer station, very rarely, but it does happen. And other times I will go to sleep. And well, last night, not so much. In fact, another night of very dog shit sleep, which I'm not very happy about. Sleep being the most important thing to me, but the show must go on, and realistically, Bitcoin's kind of making it easy here anyways. So I think with all of that said, let's get into the app scene right now. But I would like to wish you the best, and also the happiest of the happiest. And my God, man, let's press that button, and I'll see you in. Hey, what's going on right there? Hey, you bastard. Hold on, that's why. And blasting off into it, and there she is, the app, the beautiful app. And again, still very much in the early stages. I think, and I also should say that the public beta, if it even should be called that, maybe it's like an alpha, beta, gamma type thing, maybe the gamma, if you want to call it that, meaning that, anyone anyone who wants to join in, whether you have a program or not, that's likely going to be ready in middle of December. I mean, technically we can release this at any moment in time, but we want to make sure that everything's, really tight and good to go before we include everyone. So that's likely going to be middle of December. And as it stands right now, this is how the app looks. So the crypto fear and greed index ticking out of 41. Funnily enough, it was at like a 35 or 36 yesterday. So we've actually ticked up while Bitcoin does tick down, which speaks to the overall market, which is a little bit more on the condescending side. Looking at open interest, this is very much of interest, no pun intended. Over $1.1 billion in open positions right now, which is pretty damn big. Yes, we were a little bit higher yesterday, but with that move down, we did get rid of some people. But still, anytime this is over 1 billion, that's the alarm bells ringing to say, hey, move can happen at any given moment in time. That's obviously going to be correlated with volatility that we've been looking at for this past week, which also very much suggestive of a big bad move relatively soon. And daily volume, pretty much par for the course, pretty much, pretty low. We did lose quite a bit of market cap yesterday on the total market cap, almost 3%. The total altcoin market cap making up about 2.3% of that. So a good amount due to them. And US dollar valuations are falling. However, that doesn't necessarily mean that the Bitcoin valuations, I mean to say that the altcoins versus Satoshis is going to be falling as well. In fact, there are plenty of coins actually rallying right now and looking okay, So let's actually get into the charts now, as again, put this in the back of your mind's eye. Open interest very high. This is the rocket fuel that is typically needed for moves. This is typically what we see, this kind of level before big bad moves. So Let's get rid of this, and we'll come back to you beautiful bitches later. There we go. Bitcoin on the weekly, which I want to talk about a few just very, very rudimentary, very, very simple things right now. We did see the CMEs close yesterday at 5 p.m., or I believe it's 5 p.m. Eastern Standard Time, for their weekly closure, and we closed on basically new lows. We closed below not yesterday's, but last week's close, and we even made new lows on a weekly. Now we are coming down to the 55 exponential moving average on the weekly, and I do think that we likely bounce around here. Looking at the lower time frames, I don't necessarily think that Bitcoin really has the momentum to make any sort of major massive moves to the downside before playing out, a decent bounce. And that this comes anywhere between about 8,100 to where we are right now, or maybe a little bit lower, like 8,350, which we did actually reach last night. On top of that, we closed below we closed below not just the yellow 21 exponential moving average for 2 consecutive closes. If you're in the technical analysis program, you know exactly why that is important, how to play that one. And we also closed below the 10 simple, and now this confirmed cross to the downside between the 10 simple and the yellow 21 exponential moving average, which we don't have a great history here on CME, since they've only been around for what? I just want to make sure that that I'm actually recording. Yes, and my microphone's working, so this is great. It's a good start today. Then just fucking ruin everything. Woes are just going on. Yes. So we don't really have a good, history of this, because CMEs have only been out for like almost 2 years now, actually. It's going to be about the 2-year date in around a month, in fact. But if we go over here to perhaps Bitstamp, which has plenty of history, we can see that this cross, again, between the yellow and the red, the 21 and the 10 respectively, has a damn good history of playing out. In fact, if we just, get rid of everything besides that, then we can see very, very easily and very, very simply, and just getting rid of these guys right here. I'll even leave on the 200 simple for now. You can see that just anytime that they have crossed in the past, it typically does get the overall feeling of Bitcoin pretty damn good. And to the upside, generally speaking, it actually gets those moves, timing those moves extremely well as well. So this last bullish cross the upside right in over here with the 10 simple above the 21, getting this consolidation until you don't long it, and then about almost a 3x later, hitting its high at 14,000. To the contrary, right in over here, getting a bearish cross. And while I wouldn't necessarily say that this was like the best entry on cross, the next test of it right on over here certainly was, and more importantly, got the next like year and a half worth of momentum to the downside very, very well. Just blindly trading that would have been phenomenal. Would have worked out, to be fair. This cross helped us all the way out from November of 2015 all the way up to the $20,000 high on the bullish cross. Yes, we did have a one-off right here, but we can actually extend this just a few more sentences further and say that when the crosses is on the overall side of the dominant trend on the weekly, specific to this time frame, those crosses typically play out quite a bit. So playing the bullish cross right here was not the thing to do, because we're still in the downtrend. The bearish cross right here, absolutely beautiful. We're talking about from signal given to low, 71% pullback, not necessarily pullback. And then this guy right here, again, and not the best example right here, but this was not on the same side, and same thing right here. In fact, I would almost say that the slope analysis of these two moving averages is more important than they're both important, right? But the slope analysis, I do think, holds precedence here, because slope analysis, when we're talking about a higher time frame like this with moving averages that are pretty well respected, is telling you, it's like really in the most basic sense, everyone knows this, but it's telling you what the average of price is doing over time. And when you have a downward slope on these guys, especially on the simples, which we should actually be looking at a 30 for this, but that's fine. We can do that. You can do that another time. It's telling you that the average price is over time going down. Over that amount of period of time is going down. So when we're trending below these moving averages and we get a negative slope on them, which we are just about one tick away from doing, and CMEs have already confirmed right on over here, then very, 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 very likely we see a similar signature to what we've seen in the past. Just looking at when they both got a positive slope right here, that was that was actually the best initial warning signal. It would have given you a better entry than just waiting for the cross itself. So it's a two-pronged thing. And then same thing to the downside right here. They both get a negative slope right here. It tells you to short right at this 11.5 region, and you don't really have to do anything for the next year and a half. Same thing to the upside right on over here. Both gets a positive slope, and it would have kept you out of this trade right here, to be fair, as well. And then same thing right here, gets a negative slope, tells you to short this one, tells you to short right here as well, as I get a negative slope right here at about 8.14, and then same thing right here. So all of these met with pretty damn good results. And now I want to talk about some that I have not, I've never spoken about this at all, but It is interesting, right? Well, actually, hold on. Before we get into that, I do want to talk about this. Again, if you're in the technical analysis program, or I think I actually made this one public as well. I think this one is public actually on the Technical Analysis 101 playlist, which is on YouTube for free. We do see a cross of the same moving averages on a daily, which typically does play out pretty damn well in Bitcoin's history. Not perfectly, again, when they're on the overall side of the dominant trend for that time frame, especially if you take it just, one step up to a weekly. Or maybe, or even a 2-day in that sense. Though, these have some pretty damn good results. So we are actually getting a bearish cross of these guys right here, both having a negative slope. Last time we saw this was, well, back on over here before this nice, what was it, like 40, about 30% drop from 10.3 down all the way to 7.3. And then just kind of back testing a little bit more. Obviously, riding over here, even blindly trading this would have been okay. Not, not perfect, of course, but it would have been okay. So I just want to show the efficacy of this. And going all the way back on over here for the big trending move gets it really, really well. And same thing for the breakdown from 6,000 to 3,000 of last year. And all of these moves in between, getting it pretty damn well once again. So let's just take this one step further. And what we'll do here is we'll bring up our indicators. And what I have on the bottom pane right here is the Bitcoin hash ribbons, which are about to do something, or potentially about to do something that we haven't seen in a very long time. In fact, the last time that we saw something like this was back on over here, where we see a cross between these two, well, do you want to call them lines? Do you want to call them ribbons? I mean, they're basically moving averages on the hash, on the hash rate. And what are we looking at right on over here? Well, guess where this was? If you guessed right before the breakdown from 6,300 down to 3,100, you would be right. Exactly. And so this is speaking to the, to the hash rate of Bitcoin, which actually I do think makes a humongous, we see a good correlation between this and price action itself. If we go a little bit further back, we can find another example. Perhaps if we go, right on over here, producing this pullback. This one was what let's go from top to bottom of this top to this bottom. That's about 45%. Sorry, and I should also measure this one out right on over here. And let's see, last high before next major low, about 54%. Okay, so pretty comparable. About upper 40s between mid 50s so far. Let's see if we can find any other examples. We have a one-off right here, but I would say that your signal that this was not going to be a good one is just the fact that they were so damn close to each other. We never got bifurcation or away from them. However, just a few months prior to that, we actually did, and that was what led on for this move to the downside right here. So, is there a degree of error here? Yes, there is. However, on the whole, on the average, we are seeing, pretty massive drops. So this one, another about 67% drop down. Before that, I think we'd have to go all the way right on over here, which again, not the best example, but from high given, to kind of where we bottomed out at, about 30% down. So within the realm of reason, and this guy right here as well, actually coming off the lows. So it goes both ways, to be fair. But looking at what we're doing right now, we are damn close to seeing a very similar cross. And I would say that the divergence between these two guys, these two, these two colored lines right here, if you just want to colloquially refer to them as that, is going to speak to the impact and efficacy of this. So we are damn close right now. We're basing on it once again. The reason why I bring this up is because last night, actually, as of last night, we were actually getting a full-on cross. We're actually initiating a full-on cross. It has since salvaged itself because it does update on a daily closing basis, but it is of interest right now because typically when we do see things, get this much divergence away from each other, that is when we are typically putting in, tops, to be fair. So I do want to present that, and realistically, if we were to shave off just again on average like 50% off our current price action, taking it from this high right here, giving it the benefit of the doubt as we did with the prior ones, where that bring us down to, it bring us right back down to the $5,000 region, which, if you recall, is going to be right around the weekly major sports, around the 200 exponential moving average and the 200 simple moving average right here, both of which have been major indications of kind of where we are in the general market cycle. In fact, that's where we bottomed out in December of this current year at 3,100, and actually the market cycle prior to that as well. And again, just kind of measure it out. Again, giving it the benefit of the doubt here, about 50% would bring us down right around here, and you can see that the 200 exponential moving average would be kind of crawling its way up around that time. So here's the thing, and I want to be very deliberately clear with this. Do I think that anything like catastrophic is happening today or tomorrow or the next day or even the next fucking few months? Probably not, no. But I do think that there is legitimate concern, and my concern would be, in my mind, realized if we do lose about $7,900 to $8,000 on a weekly closing basis. If we close a weekly below there, I do look at this as this structure crumbling down, and we've kind of already tested the lower $7,000 region. It got front ran right here. I do not think that we'll have anything but a small bounce on the lower time frame. If we got back down there again. So for now, my general idea here is mostly that we're going to be ranging between low 8,000s, of which we kind of reached last night, and 10,000, we'll call it, like maybe 10.3, 10.5, where we broke down from, about a month or maybe a couple months ago now. But I would get majorly bearish looking for a move down into the let's call it like mid to low 5,000s perhaps, if we do violate this area right here on a weekly closing basis. So for now, Bitcoin probably mostly just ranging. I think that that's the most likely thing to happen for the next few months, up until the halving. I think a lot of people are looking for a major, massive move to the upside for the halving. Everyone's talking about, going back to $20,000 highs. I think the most likely thing to happen is just range here and piss a lot of people off who are looking for that big trending move. What do people hate the most? Chop. I mean, what do I love the most? Chop. I mean, that's basically, your sideways trading ranges. That's fucking beautiful if you're going to be a day trader. Absolutely. It's terrible if you want to be a swing trader. It's terrible if you want to be, an investor, DCAing into a fucking, into a zone like that. But you get what I'm saying anyways. I would change my opinion on the upside if we did close a weekly basically above this area right here, and you can just eyeball it out, the resistance trend line right there. I'll put on my drawing tools. You can see that's yes, right around about 11.5, 11.6 region. If we could start closing weekly dildos above there, I would get massively bullish, but I don't really have any, and massively bullish for move back up to like 16, 17,000 and beyond at that point. It's just be super fucking bullish really. But until that happens, to me, this is likely ranging, and technically speaking, we are kind of, printing a descending triangle as it stands right now. In fact, if I put on the 55, you can see that the 55 exponential moving average on a weekly closing basis has been governing our lows thus far. So I do think that is quite likely that we actually make a formal stab down into this region. I think it's also quite likely that we bounce off it again and put in some time, filling this area out, and then, whichever way that it breaks is going to be pretty damn simple, right? Do we break above this level right here? Well, then I'd be looking for a test up to this region right here. And, at that point, the bullish side becomes a lot more enticing. And if we come all the way down here and we actually break it on a weekly closing basis, then I'd have to get super bearish for that trending move. But as long as we're holding this, yes, technically is a descending triangle, which is more likely to break out to the downside. But I've seen everything break out every possible which way. So I'd still give it the benefit of the doubt and just go off of very, very simple strategies like support and resistance for judging the overall macro. Remember, the dominant trend on the weekly is down. We do have lower highs and lower lows confirmed on a weekly closing basis. So technically, that is your dominant trend. So I want to speak specifically to what we saw yesterday, right? Because yesterday on stream we saw this move to the upside right here, which was like a $300 move, almost a $200-$300 move, right? Which everyone got really, really excited. Not everyone got really excited. I mean, a lot of people sold into it and spoke about it on stream. Fair enough. Credit to you. Fucking credit to you. But I just want to speak to this right now because, even if we just took off moving averages, you don't need to know anything about that. In the most basic of basic fucking ways, it's a downtrend, even on a 4-hour time frame. So we have, the dominant trend is down on like a weekly, daily, and then even a super fucking low crack trader time frame, like a 4-hour, which is not even that bad. I mean, like, an hourly below on Bitcoin is kind of crack trader. It's still down. We didn't even print a fucking higher high right here, and this has been the whole thing the whole way through, right? If we go over here to a weekly, where do we get stifled at? Well, we got stifled out on this $3,000 move. Well, motherfucker. We got stifled at on this $3,000 move right here on a weekly closing basis. That was just our support of the last 3 months consolidation right here before breaking down. And then if we go down to a lower time frame, Bitcoin just got walked down with each and every passing tick. First we broke this consolidation, and then where do we pop back up to and test? Right around here. What happens? We never get above and down. And then what happens on this next one right here? You see the same sort of thing. We break down, we retest the resistance of this, it's a rejection, and break down again. And then what happens on this next one? Well, you can actually cut it even closer right here. We come up and test it, and then reject right off it. And then even like closer than that is what we saw yesterday, breakdown right here. Where do we pop back up to? Exactly where our last support was. Rejects from it. No closures above that area were had. That's why I held on to my position. And then again, I did close a lot down in this region right here. I'm holding just a very small amount now. Not a small amount, but a small amount compared to what I had before. And now we can do the same thing right here. With this current low, we came up and tested it actually sometime while I was sleeping, it looks like, and looks like we might even test it again. So I don't even really see from a lower time frame perspective to be like even looking for a move to the upside until we at the very least just clear above here on a 4-hour total closing basis, and that doesn't do anything for the dominant trend on the weekly, on the daily, on basically any other time frame really. So that's what I want to focus on right now. The thing with this is that we're kind of in a dangerous territory right now if you do want to be taking shorts. Yes, I do think that the daily looks pretty atrocious right here. Let's put back on some major moving averages. We did close. We did both open and close below the 200 exponential moving average. We are getting the bearish cross right here. We are seeing divergence between the 21 and the 55, all very bad things. So I would be looking at the daily, pivot point right around about 8,700. So as long as we're below there, probably okay. To play it short still, but how much more momentum do we really have to the downside? It looks to me like all the lower time frames are pretty beat up, so we're probably building some divergences by this point. Let me get rid of this. Whoops, there we go. Are we building divergences actually? Technically no on the 4-hour. I'm sure someone's going to say back on over here. Nope, not the same thing. This is completely different consolidation, way far away. Do we have any on like a 3-hour? Maybe, yeah, we do. We do own a 3 hours, so maybe we do get a move back up to test around like 85, 50-ish region. But here's the thing. And again with that, I think it's kind of to me it'd be a little bit too hairy to be taking shorts in this region. All lower time frame momentum oscillators, even like up to the medium and higher time frames, are getting beat up pretty fucking badly here. So 4-hour Stokes are up, 3-hour Stokes are looking across up, 2-hour Stokes are looking across up as well, all coming from the same area, and hourly right here as well. So I do look at this as likely to play out a decent bounce relatively soon. Do I think that we could hit maybe like 8,200, 8,100 before that bounce? Yeah, possible. My point is that I wouldn't be putting on like super risk right here. Yesterday I think it was fine. I think that was a little bit more obvious. Right now, like I said, I'm holding a little bit of my position, but I was very happy to close a good amount as well. In fact, I think even on like an hourly, we are getting a buy signal on the jewel. In fact, it's okay. It's not a perfect one, but it's okay. 2 hours looking good for a buy signal as well. 3-hour could curl around, but usually those ones are not good, and 4-hour not good. In fact, remember, those are all lower time frames. Let's just go to like a 12-hour, which is not that crazy of a time frame. This was your continuation sell signal that we had yesterday, right? So we spoke about this yesterday on stream, and again, this is why I was happy to hold short. The jewel just laying the way down. Now, of course, I wouldn't take a short right here, but based off this signal right here, if you did take a short, maybe on a lower time frame, this is basically telling you to hold that one. So through yesterday, at the very least, which granted you another like $150 to $200 play. So very, very nice. Well, I mean, I guess if you shorted at like what 8,800, then that was almost a $500 play. So not bad, actually, pretty damn good. In fact, getting that $500 move that we've been speaking about for quite some time. Look at this. Historical volatility percentile is absolutely crushed here. Absolutely fucking crushed. So what does that mean? It does mean that the next move likely is going to be pretty damn big, and with the lower time frame starting to turn around, it does make me apprehensive that we are going to see that. It makes me think that we probably do see that as like the next big bounce to the upside. Where does that come in around? Where are the areas of interest? Like I said, the 200 exponential moving average, which is 8,700, big area going onwards and forwards from here. Then we got 90.50 right here on this little consolidation, and then the 200 simple, which is going to be making its way to like 9,300. So those would be the areas that I'd be looking towards. But first, let's play at the downside, as getting both an open and close below the 200 exponential moving average in the form of a very obvious rejection probably does net us another drive to the downside. So I do think it's more likely that we get a little bit more continuation here, but a bounce is a sizable bounce probably can come in after that. If we could get down into the low 8,000s, maybe 7,900, that would be perfect. I'd love to close full positions there and open up preps, a little bit of a bounce long. But keep in mind on the daily right now, there's something very, very obvious that's about to be hitting us probably in the next week to week and a half. And let's just look at it right here. Look away, bulls, look away. We're going to, as long as we're below the 200 exponential moving average, 8,700, that's a critical point. Because as long as we're below it, we will inevitably get a death cross on the exponentials, which I put significant more weight on than simples or anything else really. Again, the efficacy of this cross, both to the upside and the downside. To the upside, beautiful. To the downside, beautiful as well. You know, and this has an amazing history of playing out. Upside right and over here, downside right and over here, and this one not so good. But you know, nothing is perfect. So my point is that hey, if that does happen, say we come down to like 8,000 first or whatever it ends up being, and we bounce back up, and then we still get rejected from about 8,700 or wherever the 200 exponential moving average is, which that would be like a $500 to $700 bounce. And I'm making a lot of assumptions here, but just roll with it for now. That's a sizable bounce. Death cross could still play out, and at that point, if we did get the death cross, then I'd probably be looking for this whole structure to break down. So that's a big area to watch for, in my opinion, over the next like week and a half. Like I said, it's not happening today, tomorrow, not even next week. Well, maybe next week, maybe like late next week, depending upon how far away we get from the 200 exponential moving average. Like I said, the further and further we travel, the more and more inevitable it does get, and the more and more nasty it does get as well. So yeah, anyways, let's see, what are daily momentum oscillators looking like? Yeah, even daily Stokes are pretty beat up down here. They usually don't like to stay down here for too long. This is why I'm like, I'd be apprehensive to be opening up shorts right now, but I'm happy to hold my shorts, a little bit left. In fact, we are meeting this trend line as well, I believe. Yes, indeed we are. Nope, we're not actually. Maybe a little bit more down. So I would be looking for a bounce off this region as well, perhaps. What else do we have on perhaps a 12-hour? Do we see 12-hour Stokes beat up quite a bit here? Again, they don't like to stay down here for too long, historically speaking, and typically these are all major bounces as well. Just blindly trading that would have been a net winner over time. Does 12-hour RSI have that same trend line? Yes, indeed it does, and we are meeting it right now, or we might be destroying it right now. So stay tuned for the next when's the next closure? 4 hours and 44 minutes. So could be some time, but you get the point. If we do close below that region, I'd be looking for the jewel to bring it down another notch. Again, it makes it. I think the edges are tight here. Just hit the 2-day by accident, but higher time frames, still pointed down. The 2-day is bearish, rejected from the bullish control zone and down. 2-day Stokes have been phenomenal. 2-day RSI bearish, losing the exponential back into the bearish control zone, fading this falling pizza right here. So not looking good. What about 3-day? I would imagine 3 days almost the same. Yeah, 3-day having a fresh cross down, another rejection of the bullish control zone, and 3-day RSI doing about the same thing, and then just take that up one step up to the weekly, which actually the weekly is a lot different. The weekly Stokes are actually pointing back up, which these have been really, really good moves in the past. So I am a little bit apprehensive on that one. That one would be certainly more on the bullish side. However, rejection right here on the weekly on weekly RSI does suggest that we want to at the very least test the bearish control zone. So this can take a while to play out, of course. When we're talking about a weekly, we need to operate on a weekly schedule. So the problem is that people will look at a weekly, take a signal on the weekly, and then go down to like an hourly and fucking start sweating themselves every time that every time that it moves away from wherever their price was or whatever we're thinking. So again, if you're going to trade a higher time frame, adopt a higher time frame mindset. And again, as long as we're closing weekly dollars above the green 55 right here, I don't really think that we have like a massive meltdown. I just think it's possible, and it's something that I'd be defensive against. But for now, again, I think the most likely thing to happen between now and like the halving is we see a range built between about 8,000 and about 10,000, we'll call it, and the break outside of that range, maybe like 10.5, and the break outside of that range is going to be the next big direction, most likely. I would like to put the spotlight back on the Bitcoin VWAP ratio. Let's zoom in on this one. And we do see it turning down a little bit more. So it has taken another step down. I won't go through the full explanation on this one right now. I'll probably do that tomorrow during the long-term analysis video. But remember, this, just getting this signature right here with the purple and the pink below this regression line, that's been good enough to produce all these meltdowns in the past. Example right here from 20,000 to 6,000. Example 2 right here from bull trap of whatever it was down here. That was 75% move or 70% move. Another example right here from this high down, about 70% move right there as well. And same thing on this example this example right here as well. Another 70% move to the downside, and this guy right here about a 90 not to 94% move to the downside. So a little bit of an outlier, but you do see historically speaking, that's I mean, it just hasn't been wrong. And I'm very when we see that many iterations of it being correct, it makes me want to err on that side, and I kind of do in some sense. I think that a lot of people are just blindly thinking that Bitcoin just goes up because halving. Well, it would be very reasonable to think that we already saw that priced in on this run right here. I mean, shit, just put your eyes on Litecoin. I know that they're a little bit different, but in what happened on the halving, but very kind of similar here in a sense. Here in a sense, we did have about a like 300% or actually almost 500% move to the upside, so even better than Bitcoin, and then crashes down like 70% of that. Or at least, about 68% of that. I mean, it's not fucking good. In fact, let's just put the spotlight on Mrs. Litecoin for a second here. Let's put on the 200 simple. We actually are in danger of losing the 200 simple, and I'd say the next big thing for me, it's bad enough that we ticked below last week's low. I think that's like really, really bad. But this would be ultra confirmed in my mind if we even just close this next weekly dildo below the 200 simple, which is $58.50. So if we close below there, I'd be looking for another move back down to $54, $53 region. We did see the move that we were looking for yesterday on the daily. We did see the move down to the $57 region. So very nice. If you took advantage of that, then congratulations. Let me put back on all major moving averages. And same thing for Mr. Butyrol, I believe that we did hit our 176.5 target. Yeah, 177 target hit to the T, actually. Pretty damn good. And again, I don't want to say these things sound arrogant or anything like that. It's just, you can see how these things operate over time. And I think for the people who have been tuning this content for a while now, like you all know, typically how this operates, it takes time. Like we do these videos every day. It doesn't necessarily mean that there's going to be a move that happens every day. It's just, I'm like bored as fuck and I'm not going to be able to do it. Like, what else am I going to fucking do? And also I have like some sort of weird OCD with putting out videos now. It's like a ritual, a part of my day, but I truly enjoy it. So it's like a good ritual to have, right? Anyways, it's, you want to be choosing your addictions, right? So I'm happy to choose this one. So yeah, these guys melting down. I'm curious what the other top ones look like. Mr. Stellar losing his luster right here as well. Probably coming back down to 6.7 cent. Probably comes back down into the middle of the range here. Although longer term it is kind of flattening out, to be fair, but too many rejections from the 200 simple, not good for the immediate price action. Ripple down to our 26 cent target, not bad, actually even lower than that. Got beat up pretty bad the other day, 25.25. Again, does it bounce here? Probably does try a little bit of a bounce, maybe back up to like 26.5 cent, but this is just another lower high over a very long period of time. I mean, this is a downtrend and it's been downtrending ever since, January 2018, almost 2 years now. Yes, we are on the 200 exponential moving average, so it's like, how much, do I really want to be getting short in the region like this? Probably not, no. But if we do close below it, then I'd be looking for at the very least another test of this area, like 23.5 cent, and probably lower after that. Probably a small bounce. Probably a small bounce there though. What else do we have? Do we want to check out? I think a lot of people have been talking about Neo recently. It's actually up on the day, funnily enough. Daily looks like it wants to come back down though. Daily momentum oscillators, we got some major bearish divergence on the daily right here. Yeah, I think this one comes back down to like 11 and 15 cents. What else have people been talking about? Maybe EOS perhaps. EOS looks like it wants to melt down here as well, probably back down to 316, 315 region. Maybe not that much. Maybe more like 3.25 actually. But I would be looking for some downside here as well. Same sort of bearish divergence present. Although you could very much argue that this is likely played out. But closing below these guys right here, I mean, usually not the best thing. So yeah, let's go back on over to Bitcoin. I didn't really talk too much about the upside potential, for a next proverbial bounce. But realistically, just going over here on a 4 hour and just mapping up all of the local lows and local highs, it's going to get it more or less done. Looking at my timer right now, it's 34 minutes. So holy shit, I've been speaking for so long, but said so little. But overall, we did see the death cross happen the other day. That was kind of my impetus for getting a short in on this area right here. And, that's kind of when I took the trade that I did. And you could look at the 4-hour moving averages as good, like kind of insightful points as well. From a lower time frame perspective, I don't really see any reason to be even like short-term bullish, unless if we close like a 4-hour dodo above 8,700. That would also be the daily 200 exponential moving average. So if we did pop up there, I'd actually be looking for a pullback on the first pass at the very least. Kind of similar to what we saw yesterday. This was such an emphatic rejection right here, and now we're like what, $200, $300 away from that price? Yeah, about 250. So right smack dab in the middle. So if we did get back above the 200 simple, that still wouldn't do it like overall for me. It would make me think that we have another move back up to test around like $9,000 or wherever this high right here is. Yeah, about 90.50. Yeah, 9,000 to 90.50, and that's like the next big area. If we get back above there, then I'd be bullish for a move up to about 9,400 around this territory right here. But for right now, I don't see any real reason to fight the trend, although I do think that we are due for a decent bounce, $400, $500 plus. It's a tight fit here. I think it still is more likely that we move down. The trend is down. It's just, I probably wouldn't be taking shorts from this region here. It's just how, where you're going to manage risk on this one. It's too much open risk in my opinion. Let's go check out GBTC. It also closed for the week yesterday. So we get to see the weekly close. And what's the weekly close looking like? Yes, we do have continuation. We have confirmed this as a local high, also a lower high. So we have lower lows and lower highs. Downtrend is confirmed on a weekly closing basis. We do see weekly RSI clear rejection off the exponential right there. Pretty nasty. What about the daily? Daily's kind of sitting on the 200 exponential moving average. Technically did break it on that last tick, but momentum loss order is looking very bad here. Daily Stokes nosediving. Daily RSI back to the bearish control zone after getting rejected on the exponential. I mean, bad. So it looks to me like it probably does want to line up for a test of the 200 simple, which is about 972. That would probably line up with my like $81, $8,200 target. Anywhere within that region is probably good enough. So I'll be happy to close the rest of my position there. If not, I'll be managing risk actually quite soon, just because I don't want to let this one run away from me. It's been a very it's been a very slow trade. It's been a very nice trade, no doubt about that. But the worst thing is giving back profits when you don't really have to. So again, just playing the trend here, completely fine. What else do we want to look at? Do we want to look at anything else? Want to look at pound yen? Probably not. We could look at the New York Bitcoin index right here. I do think that this one is actually really, really interesting, just for the moving average perspective, as we do see, or let's go to a daily. The daily looks like shit. We could go to a buy daily, hashtag gave for TA. We do see that this area right here is an area of interest. That this would actually be mid 7,000s. Maybe not as helpful as I thought. Let's put back on all major moving averages. Maybe the 21 or the 55 is somewhere around here. Yeah, this is nasty though. We did lose the 21, and this is confirmed now, of course. And the 55 looks to be our base support, and that's a hair below about 8,000. So 7,900 to 8,100 probably likely. Although I'm not trading for that right now. I want to be more defensive here than anything. So if we do move down there, I'll probably be happy to be a buyer for potential bounce, and I'd certainly like to close shorts down there. But don't be surprised if I come in later today or tomorrow and say that I've already closed my short if we move back above this region right here. I think that's just about it. We can wrap this bitch up once again. I think that overall, I'm happy to continue to be bearish as long as we're below the 200 exponential moving average, as long as we have a 4-hour dildo death cross, and targeting move down to like the low 8,000s, upper 7,000s. You could really argue that we already hit that. Although to me, it does look like we want to have another try lower. Before like a legitimate bounce. I don't really see any reason to not be bearish on Bitcoin, even from like a low time frame perspective, as long as we're closing 4-hour dildos below the white 200 simple right here, which is about 8,700. That's also the daily 200 exponential moving average. So I'd even govern like the lower time frames from that. But that does offer up, potentially a $200, $300 move to the upside here to test it. Completely fine as long as it rejects. All major moving averages are turning bearish here, are sloping down. Not good. Speaking of, and I'll just kind of, I guess this will be the end of it. I want to look at all the simples right now. Is the 30 simple curling down? Is it curling down? No, it is not. It's still actually angled up right now. So we did lose the 50. We did lose the 50 simple. which I think a lot of people are looking towards. If you're using simple moving averages, I would use this as kind of like a risk management point, 85.50. So kind of does line up with those lower time frames as well, being an inflection point right there. And realistically, that's really all I have to say for today. Again, just let the trend be your friend. At the end of the day, it's the most simple trading style, and it's not the most sexy one, but it works if you are going to trade trends. For all of that said and done, I do want to wish you a nice and happy and profitable rest of your Saturday. Yeah, hey, have a happy Saturday. It's dark as fuck here, but I love it, man. I love living in the dark right now. And take care. Until next time.